As we keep a close eye on the markets right now, Ondas Inc., trading under the ticker symbol ONDS, is closed for the weekend following the last regular trading session on Friday, July 17, 2026, where the stock wrapped up the day at a price of $6.52.5. The stock experienced a decline of 1.9% during that final session, capping off a highly volatile, high-stakes week that saw a total weekly drop of about 10.1%. When you track the absolute massive spikes in trading volume over the last few days, it becomes crystal clear that something far more fascinating than a simple market correction is playing out beneath the surface. While the broader public narrative focuses heavily on the company's high-profile subsidiary Sentrycs, recently securing critical drone defense contracts to protect the airspace for the 2026 World Cup host cities using its specialized cyber-over-radio frequency technology, the real mechanism moving this stock right now has almost nothing to do with sports or stadiums. The immediate surprise catching institutional analysts off guard is an unprecedented trading volume explosion that completely eclipses the company's entire share float. In fact, over just 5 recent consecutive trading sessions, a jaw-dropping 671.5 million shares of Ondas changed hands. To put that into perspective, that represents roughly 118% of the company's total outstanding shares traded in a single week. This implies that every single share in existence theoretically moved, settled, and moved again, creating a structural liquidity whirlwind. This intense volume anomaly happened to coincide directly with the registration of a massive 40 million share block allocated to the former owners of DZY Technologies following a major acquisition. The market expected this heavy block of shares to completely suppress the stock price under a dark cloud of toxic supply overhang. Instead, the market absorbed a staggering amount of liquidity, creating an intense chess match between short sellers, retail momentum buyers, and corporate insiders. The classic expectation surrounding Ondas Inc. has always been that it is an early-stage speculative play on automated industrial infrastructure and advanced drone ecosystems. Mainstream retail traders looked at the firm as a hyper-growth vehicle operating in a niche defense and commercial sector that would take years to scale. The general consensus was that the company would remain a cash-burning entity, diluting shareholders continuously to fund minor technological experiments. However, the concrete reality shifting the entire thesis is the sheer scale of the company's recent massive corporate consolidation. By acquiring DZY Technologies, the company did not just buy a loose collection of intellectual property, they bought a structurally sound asset that is actively generating positive earnings before interest, taxes, depreciation, and amortization. Management is openly projecting that DZY alone will contribute a hefty $191 million in revenue for the full year of 2026, driving the total consolidated revenue target for Ondas to a minimum of $525 million. When you contrast a $3.7 billion market capitalization against a suddenly clear pathway to $500 million in top-line revenue, you realize that the narrative of this company being a fragile pre-revenue concept is completely dead. This disconnect between perception and reality is causing major ripple effects across popular online investing platforms, individual brokerage setups, and automated wealth tools. Many self-investing enthusiasts utilizing services like Schwab Intelligent Portfolios or browsing mainstream investing sites are seeing Ondas pop up on high-volume screeners without understanding the underlying mechanics. When you use an intelligent portfolio framework or tap into online investment help, algorithms look at trading velocity, and right now, the velocity of this stock is virtually off the charts. The stock's current trading activity stands out dramatically when compared to its immediate peers in the defense and aerospace sector. While a close competitor like Red Cat Holdings experienced a much harsher 13.5% drop over the exact same weekly time frame with normal expected volume metrics, Ondas handled an absolute deluge of shares with a relatively controlled single-digit contraction. This tells us that institutional hands are actively accumulating these shares as quickly as they are being made available. To understand the mechanics of the current trading action, we have to look closely at the trading rules governing the newly registered DZY shares. Under the explicit terms of the share purchase agreement, the sellers are strictly limited to unloading a proportional amount equal to 10% of the previous day's average trading volume on any given session. Because the trading volume spiked to massive highs, reaching over 100 million shares in individual daily sessions, the daily cap for these institutional sellers expanded exponentially. This structural quirk allowed the former owners to potentially flush their entire 40 million share block into the open market in less than a single business week without completely collapsing the underlying equity. For individuals managing a personal individual brokerage account on retail apps like Robinhood, seeing a stock trade multiple times its float can look terrifying. Retail platforms tracking Robinhood stock trading and general Robinhood investments often flag this kind of extreme volume as a warning sign of an impending crash. Yet the data reveals that the market actively chewed through the entire block of supply, effectively wiping out the near-term structural threat that kept a ceiling on the stock price throughout the early parts of the year. If you are a self-directed investor managing your assets through a comprehensive fidelity trading platform, analyzing these micro-level liquidity events is exactly how you uncover mispriced opportunities before the broader market catches on. Whether you hold your assets within standard Fidelity investment accounts, manage specialized Fidelity ETFs and Fidelity mutual funds, or monitor your long-term wealth through Fidelity Wealth Management and customized Fidelity IRAs via the Fidelity mobile app, understanding the difference between fundamental weakness and technical supply distribution is critical. Ondas is sitting at a fascinating crossroads where the technical distribution is finishing up, leaving a completely cleared runway for the fundamental business model to show its true strength. The company is no longer just selling remote radio components. It is transformed into a comprehensive, multi-layered hardware and defense software ecosystem. Let us take a brief step back to look at what this business actually builds and how it intends to make money over the long term, away from the daily chaos of the stock charts. Founded in 2014 and headquartered out of Sunnyvale, California, the company built its initial reputation through its Ondas Network segment. This division created the Full-Max software-defined radio platform, a highly specialized proprietary radio technology designed explicitly to provide private, wide-area broadband networks for mission-critical industrial applications. Think about major freight rail networks, massive electric utilities, vast oil and gas fields, and public safety frameworks. These entities can't afford to rely on standard cellular networks or public satellite links, where a single dropped packet or a network outage could result in a catastrophic train derailment or a localized power grid failure. The company's hardware provides secure, highly reliable communications across private, dedicated radio frequencies. Over the last few years, the management team realized that the secure communications network they built could serve as the perfect foundational backbone for the rapidly expanding automated data and drone defense sectors. This realization gave rise to their second major segment, Ondas Autonomous Systems. Through this branch, the company offers highly advanced counter-unmanned aircraft systems and localized physical site protection. Their product line includes the Iron Drone Raider, a fully autonomous interceptor drone system specifically designed to physically neutralize hostile or unauthorized small drones in mid-air. They pair this physical interceptor with the Sentrycs system, a cyber-focused platform that detects, tracks, and takes over the radio frequency control of rogue drones to safely land them away from populated venues or critical infrastructure. By selling the high-margin hardware units up front and attaching long-term, multi-year software maintenance, security upgrades, and operational support, the business model shifts away from unpredictable one-off product sales towards predictable, highly sticky recurring revenue streams. Comment below how many shares of Ondas Inc. you currently hold, or if you are planning to avoid the small-cap defense sector entirely during this high-interest rate period. When you evaluate this stock alongside popular modern investment choices, it becomes clear why it has captured so much attention. Investors tracking high-growth asset classes across platforms like SoFi Invest or standard SoFi Investing often look for companies with massive addressable markets. The active user base participating in SoFi stocks, SoFi ETFs, or using the automated SoFi Robo-Advisor and SoFi Active Investing options typically look for major secular trends. The global explosion of drone warfare and the corresponding desperate need for localized automated drone defense protocols is one of the most visible macro trends of our decade. Similarly, professional day traders executing high-volume orders through the Interactive Brokers platform appreciate the incredible intraday liquidity that Ondas currently offers. Whether you deal with Interactive Brokers trading, track their competitive Interactive Brokers fees, or manage a